Imagine a computer that could solve problems in just minutes that would take our current supercomputers, thousands of years. Sounds like science fiction, right? Well, that's the promise of quantum computing. And according to the Motley Fool, it's shaping up to be the next massive growth trend in tech. So today, we're going to unpack the science, meet the companies racing to build this future, and figure out what this new gold rush could actually mean for investors. Let's get into it. So here's our game plan. First, we're going to tackle the big why, the massive market potential that has Wall Street buzzing. Then we'll get into the how, the kind of mind-bending science of qubits. After that, we'll meet the main players in this high-tech race, check out their incredible growth projections, and finally, we'll ask the big question, is this a revolution or is it a bubble? All right, let's dive right in with the big picture, the next tech frontier. What is driving all of this excitement? Well, really, it all comes down to one absolutely astonishing number. And there you have it, projected growth rate of nearly 35% every single year through 2032. I mean, to put that in perspective, that is the kind of explosive warp speed growth that doesn't just grow an industry, it creates entirely new ones. It's this staggering potential that has investors lining up to place their bets, even while the technology is still in its infancy. But what's actually under the hood of this growth engine? To really understand why this is happening, we need to look at the how. So let's dive into the fundamental difference that makes quantum computing such a potential game changer. It all comes down to the difference between a bit and a qubit. Now, think of a classical bit like a light switch. It's either on or it's off, a 1 or a 0. Simple. A qubit, on the other hand, it's more like a dimmer switch. It can be fully on, fully off, or exist in this weird state somewhere in between, representing both 1 and 0 at the exact same time. It's this bizarre property called superposition that gives quantum computers their incredible power, allowing them to explore tons of possibilities all at once. So if these quantum computers are so unbelievably powerful, why don't we all have one on our desks? Well, as you can see, there are some pretty major hurdles. For starters, they are crazy expensive to build, they're physically massive, they're total power hogs, and they're super prone to errors. The company that can solve these problems first, well, they're going to have a massive advantage. And that brings us to the main event. And this is where the race truly kicks off. We're looking at 3 key players, and each one is betting on a completely different path to quantum supremacy. Let's meet the contenders. First up, we've got Rigetti Computing. Their strategy uses what's called a superconducting approach. Basically, they create these tiny, supercooled circuits where electrons can start acting in all those weird quantum ways. It's actually a pretty popular method. Tech giants like Google and IBM are using it too, mainly because it has the potential to scale up, to build bigger, more powerful computers. But here's the key trade-off for Rigetti's approach. On the plus side, their chips are relatively cheap to make, and they're easy to scale up. The huge downside, they need to be kept at temperatures colder than deep space. And that means you need these massive, complex, and super expensive cryogenic refrigerators to run them. So what's the price tag on this strategy? Right now, the market values Rigetti at around $7.3 billion. Just keep that number in your head for a minute. Okay, our next contender is IonQ, and they're taking a completely different path. I want you to imagine holding a single atom perfectly still, just using beams of light. That's pretty much what they're doing. They use lasers to trap and manipulate individual ions, essentially turning them into high-quality qubits. It is straight out of science fiction. Now, this slide really shows IonQ's unique pros and cons. The huge advantage here is accuracy. Their trapped ion qubits are just more stable, they make fewer mistakes. Plus, and this is a big one, they work without those giant expensive refrigerators. The catch? The laser systems are incredibly complex and need constant fine-tuning by experts, which, you guessed it, makes them expensive to operate. And you can see that difference in accuracy and approach reflected in the price. IonQ's market cap is more than double Rigetti's, coming in at a cool $16 billion. And that brings us to our final contender, Quantum Computing Inc., or QCI. Now, these guys are taking what might be the most radical approach of all. They're building computers that run on light. And honestly, this could be the real game changer. QCI's chips can be made using standard manufacturing processes, which is huge. But here's the kicker. They work at room temperature. No giant freezers, no complex laser arrays. If they can just nail their current accuracy issues, this approach could make quantum computing way more accessible and a whole lot cheaper. Now, because it's the newest approach and still has that big accuracy hurdle to overcome, QCI currently has the smallest valuation of the three, with a market cap of $2.4 billion. So, there you have it. Three very different bets on the future of technology. Now let's do what every good investor does. Let's follow the money. How are these different approaches expected to actually translate into financial growth? Okay, this is where the story gets really interesting. Right now, IonQ is the clear leader in revenue, and they've got impressive projected growth ahead. But just look at the dark horse here, QCI. I mean, yeah, they're starting from a tiny base, but analysts are projecting a mind-boggling 235% growth rate. That is the explosive potential you get with a room temperature, mass-producible approach. Now, if we zoom way out to 2035, the numbers get even more dramatic. According to the article's calculations, if these companies actually deliver on their promise, the potential returns are just huge. IonQ, for example, is projected to see a nearly 400% increase from its current valuation. It's those kinds of numbers that really define a high-growth, high-risk investment. Of course, any projection that far out, you got to take it with a huge grain of salt. It is filled with uncertainty. And that brings us to our final section, framing this whole thing for what it is, a high-stakes bet, where you have to weigh that massive potential against some very real peril. And look, it's so important to remember the source's own warning here. The Motley Fool is very clear about this, saying there's still speculative bets on a speculative market. This is not a safe bet. We are in the very early, very volatile days of a brand new technology. This is the dictionary definition of high risk, high reward. Which, of course, leaves us with the ultimate question. Are we looking at the dawn of the next great technological revolution here? Is this a chance to get in on the ground floor of something as big as the internet? Or is this a speculative bubble, just fueled by hype that's destined to pop? Well, that is the multi-billion-dollar question that investors are trying to answer right now.